Straszheim, Senior MD of China Research at the International Strategy Investment Group, and he is obviously full of cheer today. He joins us from L.A. Don, happy President's Day, happy New Year today. You sticking with your guns? You still looking for the Shanghai stock market to take a wild dive?
Well, I wouldn't really call it a wild dive, Bernie. What's going on is China's economy is overheating. Everybody that's looking at it knows it, including the leadership in Beijing. Their inflation rate is rising. Everybody that's looked at that knows the same thing. And so they're doing whatever a responsible government would do, which is tightening policy. It's the right thing to do, but it doesn't mean the markets are going to like it. They usually fall when governments tighten, and that's exactly what's going to be happening, already started, and going to continue to happen in China.
It's isn't it a little unusual for them on the Friday preceding the biggest national holiday of the year to announce to banks that you have to keep more money in your own vault and not lend it out? Is this a precursor to more to come, perhaps before even the holidays are out?
Well, not before the holidays are out. Doing this on a Friday afternoon right before the holiday was a very American thing to do. You announce the bad news when nobody's paying attention, and then make it effective after the holidays are over. We had pegged this some time ago. They did exactly that. I think you'll see in the coming months a couple more reserve requirement hikes, and I think you'll see probably 4 interest rate hikes between now and the end of the year, all in the effort to slow an economy that's overheated.
If you're overheated, even if you go, as the Chinese tend to, by 27 basis points, you go up 104 points by the end of the year. In essence, that would raise lending rates by 1 percentage point. If you are looking at 11, approaching 12% GDP expansion, how does 1 percentage point, Don, bring you back to comfort zone?
Well, Bernie, I think it really gets the message across to investors and consumers in China and around the world that they are going to be tightening. But I think they also will be pulling back those bank lending guidelines that they announced about 2 weeks ago. And the huge increase that occurred, of course, in 2009, economic emergency, big increase in lending. The new increase in 2010 is not as big as 2009. It's still big. They'll cut that back further. That'll be one more sign. And I think this will be sufficient to slow the economy so that by the end of the year, it'll look like China is back to something that resembles a sustainable growth rate in the 8+% range.
Are they going to move in the second quarter on the renminbi, maybe when people least expect? And how much do you think they're actually going to allow the quantum of gains to be?
I do not think China will make a one-time step shift adjustment in the exchange rate like they did in July 21, 2005. They don't like discontinuities. I do believe that sometime during the second quarter, they'll allow the currency peg to gradually crawl again upward. And that will be, I think that's the right thing to do, because at that time, it will serve to reduce the cost of imports. That helps the inflation argument. And it'll make exports more expensive, slows the economy, helps the economic slowdown argument. It's a natural thing to do, and I think they'll do it.
Don, I'm going to throw at you basically a boiled down sort of synopsis of what the consummate bulls on China are telling me right now. They're saying that, you know, as tightening goes on, what this is going to do is put a squeeze on the companies, and the companies that are most competitive will continue to survive. So in some ways, this is a desirable kind of a beginning of a thinning out in China, and that's the next wave, and that's basically their theme for the rest of this year. Is that any kind of a theme worth lashing on to?
Well, I mean, you know, that's the kind of a theme, Bernie, that always works in any economy around the world when it's been overheated and they're tightening, and it, of course, weeds out the weaker companies before it weeds out the stronger economies. I don't think really that's the key theme in 2010 in China. I think the key in 2010 in China is they're one of the G2. They're
Right.
tightening. That's bad news, and that's going to make the markets ugly for a while.
All right. Don, good catching up. Happy New Year once again. Talk in a few weeks. Don Straszheim joining us from Los Angeles.